Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point in time. We are looking at a little bit of weakness for the Nikkei, down less than 1%. The Shanghai, not as much, still were losses of over 0.5%, but it is the Hang Seng which is under pressure, and not necessarily only because of equity markets, but also because of, well, a lot of other issues surrounding the political developments with respect to Hong Kong at this point in time. But what does that mean for the SGX Nifty? Not too much. And this is, again, very usual considering we are looking at a 20-point decline right now. The SGX Nifty is at 11,900. But what do the futures and options cues tell us about the setup right now and where we can go from here? We have Navneet Saluja joining us to give us an update on the same. Navneet, good morning.
Good morning, Agam. In fact, the correction that our markets have been witnessing in the last 2 to 3 sessions, if you look at the derivatives data closely, there's no fresh shorting seen. In fact, profit booking has been a signal which is coming at higher levels. So Nifty futures, open interest was down in yesterday's trade. Premium remained around the same levels. We managed to close above the 11,900 mark. Remember, that was breached in the intraday session. Let's see how the trading day pans out today. And similar was the case for the bank Nifty, where unwinding was seen in terms of the futures. Open interest was down nearly 2%, and the future shifted to premium versus discount, which was seen the previous day. Remember, today also marks the weekly options expiry day, so the options data will be watched out pretty closely. In terms of volatility, that's been on the lower side. In fact, I believe now India VIX could be at 1-year low around the levels of 14.1. How's the positioning looking like then in the options data? The maximum open interest on the call side, and this is for today's expiry, is at the 12,000 call. And on the put side yesterday, it moved from 11,900 to about 11,800. We've been talking about this range for a while now, 200-point range from 11,800 to around 12,000. Yesterday marked put writers running for cover, so you saw a lot of unwinding for put strikes, clearly visible here, 11,800. Even the lower level strikes saw unwinding, and call writing came back into the system. So you had the 11,900 and maximum writing seen at 12,000. Reason being, every time index touches 12,000 mark, there is some selling coming about those levels, because we've seen all-time high levels of around 12,100. In terms of stock futures, which are the stocks to keep an eye on, Berger Paints is the one where fresh long positions were seen in yesterday's trade. In fact, a lot of OI build-up was seen here. Motherson Sumi, which is witnessing short covering because the stock was falling after touching 52-week low last week. There is some rebound seen. Yesterday, the stock was up and about. Fresh shorting continues in Indiabulls Housing for the second straight day. This was one of the top losers on Nifty yesterday. And also Dewan Housing will be in focus. The stock's been moving higher this week. We've been highlighting how there is unwinding seen of the short position. So for today's session, traders can take fresh positions in Dewan Housing as it comes out of the ban period. Very quickly, I want to highlight the FI data, though there was selling on the cash side. On the index futures, as I've been mentioning, there's profit booking, so unwinding seen for both longs and shorts. But the options data indicating some bearish bets definitely coming in the form of put longs, where contracts were added, and also on the call short side, nearly 4,500 contracts were added there. Back to you.
Okay, Navneet, thanks for getting us those details.
I'm wondering, guys, since both of you are here, and whether maybe you'll taking up Jet on your FNO show today as well, but there is a change that happens in Jet in terms of the trade activity. And it would be interesting to see if from June 28, since no new contracts are added in a bid to curb volatility, stock is trading at record lows. What happens next, technically or as per the derivative side?
Well, on the derivative side, Neeraj, fresh shorting is definitely seen. And I think why the exchange has taken this move from next week, because this also marks the last month for a lot of stocks, including Jet, to be in the FNO space. And just to curb the speculative trades that were being witnessed on the FNO side, or maybe on the cash side as well, because it's become a double-digit stock now of about 85, at least on the futures side. It is to curb speculative trades. That's what the exchange circular definitely highlighted. And on the futures and options side, there is just shorting seen at every level that we've observed.
Yeah, trading at record lows, 60% done YTD, and maybe more in store. Navneet, thanks for that as well. Parthiv Shah, director at TRACOM Stock Brokers, with us on the show. Parthiv, good having you always. As always, of course, thanks so much for joining in. We'll talk about the markets, Parthiv, but since we're on the topic of what's happening within the derivative space and specific stocks, Jet Airways, and the reason I bring this up is because a lot of people might now start thinking that, okay, now it's in double digits, there could be some recovery, there is some value out there, let me go out and buy a small risk to my portfolio, etc. Would you subscribe to that theory as well, or would you caution against such thought process?
Good morning, Neeraj, and thank you for having me on the show. Neeraj, you recollect our conversations on Jet Airways, even when it was a 300 rupee stock, 250, 200, 180. And I think our view was very simple, that this is just a hope bet wherein I think all the planes are grounded. There is not even a single rupee of cash flow being generated. The liabilities are increasing day in and day out. And I think at one point in time, which is a long time back, Etihad had committed somewhere around at 135 rupees a share, which at that point in time the promoters had rejected, saying that the deal was way too low as compared to the valuation of this airline. And now here we are, the stock is at double digit and it has destroyed a lot of value. And time and again we have mentioned that, you know, this is a stock which totally, I think, whether it's an HNI, ultra HNI, retail, trader, investor should surely avoid. The only reason being, this is a stock where a lot of people try to earn that 7-10% spike based on some news buzz of Tata's coming to bail out or somebody else coming to bail out. But then one does not realize people who are not able to exit, they are losing 30-40% of their capital. And I think I'd always mentioned that this is an airline which only one should consider once we know who the white knight is, once that white knight has picked up a stake, because even for that particular entity, it's going to be very difficult to turn around a grounded operations. So I think it's a clear-cut avoid from our end. Any day we had talked about Interglobe Aviation, which has done wonderfully well. SpiceJet, if one was to take slightly more risk than Interglobe Aviation, then these are the only two options left right now, which are relatively better airlines and will also improve their return ratios based on the miseries of jet airlines.
Parthiv, good morning. This is Agam. Well, if you could also take us through what you are making of IndusInd Bank now. We have one other brokerage which has downgraded the stock with respect to concerns rising here. And we already know several other issues with other private sector banks like Yes Bank. But let's stick with IndusInd Bank now. What would your view be now?
Yeah, no, clearly we have seen, especially after the disclosure of the ILFL crisis and what IndusInd Bank talked about from its entire book, what it had to take write-off on. I think the stock has hovered in a range. On the downside, it is hovering at around 1400, and on the upside, it goes to 1650. This is a narrow range with this stock trades at. The good old days, I think IndusInd Bank used to quote upwards of 1900, 2000 levels. But now because of this overhang, I think probably the market is not willing to give a rich premium to this bank, which earlier one did. So I think slight concern beyond this crisis is the CV segment. They have a decent book in the CV segment, and that's where probably one is envisaging that there could be some sort of slowdown. Otherwise, I think this is not a type of a bank which has any major other legacy issues. It is still a very, very good book, and I think not at this juncture, but maybe a 5 to 10% decline due to any sort of news buzz correction. I think this could be a good add to the portfolio, and one could ride it out for the next 2 to 3 years, because the CV segment cyclicality slowdown is not going to last forever. Rather, there could be some sort of pent-up demand with Bharat Stage 6 picking up. But I think this is a bank which is good at a certain level, not at the current price.
Okay. Fair enough. We'll be watching out for IndusInd Bank, but and of course that's also on the list of the many stocks that we are going to discuss with our research team here. Besides that, of course, we will all have a whole host of stocks and news to watch. So we do have Mishika and Sameet joining us here. Thanks, guys, for joining us. Mishika, let's start with stocks and news.
Yes, so the first stock we're looking at is Jet Airways. So NSE plans to remove Jet Airways from daily trading from June 28th, citing Jet's failure to respond to queries about rumors in the market. The trading will be shifted from rolling segment to the trade for trade series, and no contracts will be made available for trading with effect from June 28th. This decision was taken as the company was not able to consider and approve its financial results for FY19 and observations seen by auditors. Then we have the Reliance Nippon Asset Management OFS. The promoter, Reliance Capital, plans to sell 3% stake in the company. Sale of up to 2 crore shares at a floor price of 212 rupees per share, which is at a discount of 3% from the current market price through an offer for sale. Then we have Kotak Mahindra Bank. The interest rate on savings balance up to 1 lakh stands reduced by 50 basis points to 4%. Mangalore Chemicals and Fertilizers restarted ammonia, urea and ABC production with effect from June 12th. This production was restarted in view of the onset of monsoon and normalization of water supply. The production for the aforementioned production is stopped on May 14th. Then we have all the oil companies in news today because the Norwegian government in its parliamentary meeting decides to sell shares in all global energy stocks. Norway's government pension fund Global will be selling stake in Indian Oil Corporation, ONGC Limited, Oil India Limited and Reliance Industries Limited. The fund owns less than 1% stake in each of the 4 companies. Lastly, let's look at the important bulk deals. Westbridge AIF acquired 4 lakh shares, which is about 3% of Hindustan Foods, at 425 rupees each. 6th Sense India Opportunities was the seller for this transaction. And Vanguard Funds sold 49 lakh shares of KPIT Technologies at 98 rupees each.
Okay. Well, moving on to, well, a bunch of brokerages and perhaps downgrades here. We do have UBS with a note, Sameet. What's the updates here?
So for the Yes Bank, UBS has maintained its sell rating, but they have cut down the target price to 90 rupees from 170. Now, remember this is the first double-digit target price that Yes Bank has seen, and more interestingly, the target price set by UBS for Yes Bank is less than half of the consensus target price on the street. Now, according to the brokerage, expectations of a sharp turnaround in the company is less likely to fructify, and according to their analysis, in 3 out of the 4 scenarios, Yes Bank's return on equity is expected to remain below 10% till FY21. Now, and it is also expecting the credit cost for the company to be higher at close to 255 basis points and 200 basis points for FY20 and 21, as against the management guidance of close to 125 basis points. Now, it also believes that the NPL risk seems to be higher than expected for Yes Bank, and now because of these factors, the brokerage is also expecting the key metrics of Yes Bank to deteriorate significantly in financial year 2020. Now, for IndusInd Bank, UBS has downgraded its rating to sell from a neutral and has cut the target price to 1400 rupees from 1700 rupees. Now, this is the lowest target price set by any analyst on street for IndusInd Bank. Now, according to the brokerage, the credit cost for the bank is likely to exceed the current expectations. Now, they believe that the credit cost for IndusInd Bank could be higher at around close to 150 basis points compared to the management guidance of 65 basis points for financial year 2020. Now, they also believe that IndusInd's lending to non-investment grade companies is higher than what the street is expecting, and the only thing that will be supporting IndusInd's earning in the near term would be its proposed merger with Bharat Financial. Lastly, as the risk reward is now unfavorable, the brokerage has downgraded its rating on IndusInd Bank to sell.
Okay, thanks guys for joining us and getting us those details. But Parthiv, I want to pick up Yes Bank as well here. We've started now looking at forecasts which suggest that Yes Bank could very well be in the double digits when it comes to its share price. A lot of more concerns coming up. It's already corrected quite substantially. What would your view be here? Would you be a contrarian and buy right now, or would you be cautious and wait out?
See, I think unfortunately Yes Bank has had these lot of news about resignations and the sentimental impact, and despite the fact that there was an AGM where the management tried to kind of calm down the nerves by telling that the legacy book, which probably the street is trying to worry about, is not as scary, and they have taken adequate provisions. But yes, I think this is such a time, it's such a delicate time in the financial services space that one really does not want to trust a particular management. And I think it's all going to depend upon, in terms of change of sentiment, how well is this bank capable to raise funds. I remember days when Axis Bank was struggling, and it miraculously, I think, raised funds at around 550 odd levels from Bain Capital, and I think such infusion at that point in time was, I think, sentimental changer, and we had never seen Axis Bank going below that levels. So I think Yes Bank is in a foray to raise around $1 billion. It will lot depend upon how well they're able to raise it, who participates in it, and that's where probably the sentiment would slightly change. But at least 6 to 8 months, there doesn't seem any major respite that share price would recover and come back above 200 levels.
Okay, so you got to keep that at the back of your mind. There is a hope trade and there is a realistic trade. maybe there is a case of a hope trade in Yes Bank, but the hope is also limited. Parthiv, the other quick summary is on IndusInd Bank. Are you worried about IndusInd Bank? I mean, you broadly mentioned that the banking names and the Yes Bank and IndusInd Bank. But are you worried about these names? And if you are, would you recommend that people should, if they have it in their portfolios, should switch out of them into a more expensive HDFC Bank or a maybe slightly safer Axis Bank, which is not as expensive as an HDFC, not as cheap as an IndusInd or a Yes Bank, but up there?
Yes, certainly. I think, Neeraj, if given an option and if somebody is holding IndusInd Bank, even at current levels, probably certainly won't be a bad idea to switch out of IndusInd Bank. And I think amongst the expensive bet, even something like a Kotak Mahindra Bank, it's a solid franchise. And I think this particular bank, along with its rich valuations, also brings in a lot of subsidiaries which are growing extremely well. And we know their underwriting skills have been one of the best in the industry. This is a bank which will always, I think, command a premium. And I think they are sitting on fantastic CASA. There are no other legacy issues, nothing of that sort. And I think certainly that conversion over the next 3 to 5 years could be more fruitful. And again, I think the other names that you mentioned, HDFC Bank, it's like an eternal compounder. They are very well placed. And I think one has to understand the fact that, you know, even in the private sector banks, whatever trouble has emerged, that will really benefit the incumbents like Kotak Mahindra Bank, HDFC Bank, RBL Bank, who are relatively well capitalized and who can garner more market share with relative ease and even try and improve the yield on advances. So certainly, I think if one wants to switch over from IndusInd Bank to Kotak or HDFC Bank, or for that matter RBL Bank, I think that's probably not a bad idea.
Okay, well, on that note, we get in our technical experts for the day. We have Sameet, Chavan, Chief Technical and Derivatives Analyst at Angel Broking, as well as Aditya Agarwala, Technical Research Analyst at Yes Securities. Good morning to both of you, and thanks so much for joining in. Aditya, I'll come to you. Your view on the benchmarks. Let's start with that.
So Nifty is gradually approaching its trendline support of 11,800 to about 790. If you take a look at the broader picture of the index, it's not really doing anything. On the upside, Nifty is facing resistance around 12,040 to about 11,970 mark. On the downside, supports kick in somewhere around 11,850 to about 11,800. So until unless we break out of this range decisively on either side of the trend, there'll be no trending move as far as index is concerned. Same goes for Bank Nifty. Bank Nifty is also seeing a sideways movement, consolidation, more of a consolidation. But if I take a look at the indicators, if I plot RSI on the charts, definitely it's showing that the uptrend is losing its momentum and the steam is somewhere going away, fading away. Bears are probably getting into the market. So if Nifty breaks 11,800, 790 decisively and closes below that, I believe we could be in for a good correction in the markets. Can slide all the way down to 11,600 and 550 on the downside. On the flip side, if next breaks out of 12,040 mark, then probably I'll look to take fresh longs as far as index is concerned for targets of as high as 12,200. For the time being, I'm not trading the index until it breaks down of 11,800, 790 mark.
Okay, fair enough. Sameet, good morning to you as well. Are you also expecting some amount of consolidation, some sideways movement? And if so, how would you place your bets now when it comes to the benchmark specifically?
Good morning, Agam. See, since last 3 weeks, index has not been doing much if we talk about Nifty, Bank Nifty. But if you look at the other sectoral index like Nifty IT, it has been clearly bucking the trend and it has been, holding, important support in benchmark indices. But if we look at the overall structure, we still remain bullish and 10,750, 10,800 remains to be a very strong support. So as long as this support is getting defended, we would remain positionally positive on the market, and we would rather focus on individual stocks that are likely to give better return as compared to benchmark index. But talking about purely Nifty, if we look at the hourly chart meticulously, the range is narrowing down, and we can see a formation of diamond pattern on hourly chart. So now breakout on either side, probably 12,000 on the higher side and on the lower side 11,850. These are the levels to watch out for. So probably next couple of days we would expect breakout to happen in either side. We are hoping for it to happen in the upward direction, since the overall inclination is toward the positive side. But we would rather remain positive and we would focus on individual stocks.
Okay. Let's talk about those individual stocks then. And Sameet, Chavan, I'll come to you only first. What are your top calls for the morning?
So we are clearly focusing on mid-cap counters. We still believe that mid-cap index is likely to outperform over the next couple of months or probably 3 to 4 months. The way it is shaped up at current juncture, McDowell is the one stock that has been consolidating of late, has been struggling around its 200-day moving average. But yesterday, despite we have been witnessing a good correction in the broader market, this stock managed to buck the trend. It has closed above its important resistance level, and hence we expect this outperformance to continue. So RSI McDowell can be bought with a stop loss of 562, target at 595. Apart from this, the auto ancillary space certainly looks good, and there are some stocks which have been laggard over the past 8 to 9 months. They are forming good base. So Motherson Sumi is one of them. It is now consolidating around its multi-year support lows, and since last couple of days we have been witnessing good buying interest from low levels. So structure looks good, at least for a near term. We would expect a good relief move. So Motherson Sumi can be bought for a target of 131, stop loss at 170.
Okay. Aditya, what about you? Your ideas for today?
So I got a one buy call, one sell call. Buy idea is in Urban Limited. Stock has corrected from about 180 levels to about 75 levels, and at current levels stock is sitting at extreme oversold levels. On multiple time frame charts, I see positive divergences on the chart. Plus it's completed its 5-wave downward structure, so that tells me that there is a short covering rally which can kick in the stock. At current levels of 75, the risk to reward is in favor of going long. We'll place a target at somewhere around 80, put a stop at 72.5. The next stock is a sell call on Infratel. Bharti Infratel has been an underperformer big time. Every time it tries to make an attempt towards the upside, it faces resistance at 89 period moving average, and it claws back and makes a lower low. So stock is continuously making lower highs, lower lows. So that tells me that there is weakness in the stock. Further, it is on the verge of a breakdown from a bearish flag pattern. I'm looking to short the stock at current levels of around 273 to about 270 for downside targets of 255. We'll place a stop somewhere around 280.
Okay, so those are some stocks that you can monitor in the session today. Parthiv, the other thing is this Norwegian government officially saying that they're going to get out of the oil and gas stocks across, and therefore the 4 Indian stocks as well. ONGC, GAIL, I believe, one oil marketing company, and Reliance Industries. You reckon they could be under pressure today?
Certainly, I think, Neeraj, because I think when such a global level fund, I think, talks about selling all the energy stocks world over, I think probably they want to change their stance. And I think that's where I think some of the investment theme is moving, the ESG theme that we talk about a lot. And now there's some sort of implementation. But I think out of the 3 stocks that are discussed, I think if at all Reliance Industries were to fall, maybe say by 5% from current levels, probably would not be a bad entry point, because I think we are hopeful that this year should be extremely good for them in terms of the refining margins due to the new IMO regulations, which I think Reliance Industry, having its complex refinery, is prepared for. The petcoke gasifiers are working in full stream, which should definitely aid the GRMs as well. And I think the petchem stability that they have due to the backward integration should also be good. And I think more and more, I think market is liking the fact that they are not taking excess debt for the geo operations. They're using innovative steps to enhance liquidity by going with InvIT for the geo, and I think that's something probably the market likes. So I think Reliance Industries will be the only stock which on any declines due to such news or some sort of selling flows from the FIs, I think should be a decent bet to buy.
All right. Well, that's your fundamental view on some of those oil and gas companies considering the development with respect to the Norway Sovereign Fund. But we were talking about some interesting stocks, and Aditya, of course, had pointed out Persistent Systems over the course of the last few sessions too. And I'm actually going to go over to the wall with him to address Persistent Systems. So Aditya, why don't we just go across to the wall and talk about the calls that you've had for this one. If you can just take us through what you're seeing right now and what your observations are now from here on.
This was the chart I'd shown yesterday in Hot Money. So what interesting observation I've seen out here is from 2014, stock somewhere around these levels of sub 600, around 570 levels, stock tends to bottom out. So it has done on multiple occasions. It has done in 2014, it has done on 2015, as you can clearly see out here. Somewhere between 2015-16, again it made a low somewhere around 570 zone. Again in 2017, stock made a low at somewhere around 570 on zone. Now jumping back to again 2018-19 period, stock has again witnessed a bottom somewhere around 570 zone. So if I clearly join these lows, I get a beautiful horizontal trend line support, and from there stock has managed to test levels of 700, and from there 700 stock again witnessed minor correction. But something interesting to notice out here is stock has made a higher low. The previous low was somewhere around 570 odd levels. Right now stock has made a higher low, and followed by that higher low, the previous week's candle was a bullish engulfing pattern. Following a sharp correction, if the stock forms a higher low and followed by it is a bullish engulfing pattern, these are good signs, good bullish signs, which tells me that there's an upward momentum which can start in the stock. And considering that the IT index has been coming up, holding on and performing well, I believe persistent systems can be bought at current levels of somewhere around 630, 633 for good upside targets of 700, and if 700 is taken out, I see all the way high levels of 900 in the coming months. So this is a low risk setup. One can put a stop somewhere around 570 or 550, look to accumulate at around 630, and look for a first target of 700 and then 900 over a period of 3 to 4 months.
Over the period of 3 to 4 months. That was my next question. Well, Neeraj, that's as far as persistent systems concerned.
Well, so interesting chart patterns there. Parthiv, I know you tracked this one. It's been a stock that's promised a lot, somehow has not quite delivered, either on the business side or, for that matter, on the stock price side as well. Would you have any confidence here?
See, exactly, Neeraj, what you said is the right thing, that, there's been a lot of, hope in terms of persistent systems with the ability of its management having a differentiated business model. I think so. Traditionally, the IT services business models are priced based on their contracts, and persistent system has this uncanny ability to kind of price on different projects based on a customized theme, which I think did help them in the past. But now I think probably with the product and services both, we haven't seen, I think, persistent system being in a position to really scale up their margins or scale up their volume growth. And that is the risk in many of these small to mid-size IT players. I think they have limited options, and we are seeing larger players like HDFC Technologies, which are inorganically also acquiring a lot of assets from even likes of IBM. So I think it's going to be a very difficult journey for these mid-size IT players. I don't see much value creation here, and persistent systems also lost out a little bit because of the IP related degrowth, and also more importantly some amount of cash which was parked in ILFS. So I think that was an overhang. I would suggest, I think anyone wants to be in the IT theme, better to go with the larger names. Prefer Infosys, prefer HCL Technologies. If one is wary of the TCS valuations, I think it's better to go with the large cap names as compared to nibbling with the small cap names, whose business model tends to change every now and then.
Okay, well, about 30 seconds left for pre-open, so I'm going to perhaps bring up some of these stocks. Well, if we can actually start with the SGX Nifty, that's obviously indicating a relatively flattish opening with a negative bias for now, but it isn't quite substantial for as far as the SGX Nifty is concerned. Implications on the benchmarks, and that should come up on your screen anytime now, in about 4 or 5 seconds. That's where we are trying to see whether or not we could see some sort of indication. Of course, early rates coming in while the Nifty is advancing. We've seen 0.5% gains or rather 0.5% losses for the Sensex. Again, we're going to have to wait for a few minutes before we start seeing some stability in some of these rates. But right at the top, let's bring in the oil and gas companies. So Reliance Industries, which has been under pressure anyway, and it seems that which could see some more pressure today. For now, it's about 0.5% higher, as is the case for some of these OMCs too. So BPCL was on your screen. That was also, well, okay, so HBCL is up 2.5% and BPCL is up 1%. So it seems that for now, at least as far as pre-open rates are concerned, they are, well, clearly disregarding the news from Norway. Indian Oil Corp, well, marginally in the green for now. Let's also take up and take a look at some of your, well, okay, so ONGC is the other one out there. Besides these names, let's also Well, take up, okay, I have 11. All right, so we can talk about perhaps your financial names. So IndusInd Bank will be up on your screen as well, where we do have, declines of 4.5%, and quite naturally, considering a big downgrade coming from UBS. Yes Bank is down 10%. That's at 121. We'll be watching out for that. Of course, there is a little more weakness in store, and it's not just the UBS note. It had its AGM yesterday, and from what I understand, as far as shareholders are concerned, well, they weren't exactly convinced with how the entire AGM went down. Jet Airways is now below the mark of 100 rupees per share. We'll be watching out for that one. It moves out from the rolling segment into trade to trade. And of course, we all know that this is the last expiry as far as its futures and options space is concerned. And besides that, we are watching out for our NAM. Of course, this is where we may see a stake sale come through. And Reliance Capital, and under pressure once again, that's down 10%. So on the whole, we are not looking at too much of an improvement when it comes to the ADA stocks. They continue to remain under pressure. Reliance Communication now currently trading at around 1.65.
The currency and the bond yield should be interesting to see as well, Agam. Let's just pull them up, the currency at least, and see what that is doing. 69.33, so some bit of strength out there. Indiabulls Housing Finance, I'm sure we've marked it, but just quickly bring that up. And then we'll, of course, revisit these rates in a bit. But Indiabulls Housing Finance should come up on your screen. Another day of pressure, so looks like we'll start off weak in the session today as well. And of course, Reliance Capital should be on their screen as well, because that stock the last 2 days has been under pressure, and the auditor resignation shouldn't serve it well for now, showing very volatile movement. Let's wait and watch what happens there. Jet Airways, Yes Bank, and some PSU banks firmly in focus. Watch out for all of these in the session today. Sameet, Chavan, trades on a Yes Bank or an IndusInd Bank, we've discussed them fundamentally. I don't know if they were forming a part of your picks list or no, but if not, what do the charts suggest? What do the FNO positions suggest here?
No, clearly, as far as Yes Bank is concerned, this has been laggard, one of the laggards over the past 7 to 8 months, and in fact, we have been avoiding this counter since the September fiasco. So, any rally, in last 5 to 6 months, we used it for exiting existing long positions, and we have not been advising since then. Trading around its major support level. So today, if we see the stock sliding below 130 and sustaining below that, then probably the stock can head towards 110, 115 levels. So one should avoid bottom fishing. Any kind of bottom fishing in some kind of counter, it's like a falling knife. Any bounce back is likely to get sold into.
Okay, any bounce back likely to get sold into. I think you should keep that at the back of your mind. A lot of people would see bounces and believe that the bottom is made in place. Maybe the bounce is just an opportunity for people to get out. So you've got to keep that at the back of your mind when you're looking at these stocks. Trying to look at the list of gainers, there is hardly anything but for the fall in crude prices, which is aiding the oil marketing companies. There is hardly anything there which is looking solid. Actually, Parthiv, I know you must be thinking that on every show, Bloomberg Quinn talks to me about the oil marketing companies, but hey, crude keeps on falling, and therefore there is merit in talking about that at every price level. If indeed the belief is that oil prices are not in a hurry to go back up, fundamentally, earnings-wise, could there be a sustained period of good growth for BP, HP, IOC, and therefore do they merit a look at?
See, Neeraj, I think very fair question, and generally these are one of the best positional bets whenever crude prices tend to go down. Our currency is relatively very stable, but I think of late the crude prices are going down, more importantly because of a global slowdown bet, and I think that certainly helps these companies and certainly helps these balance sheets. But Neeraj, my biggest problem with these companies are like it has too many moving parts. One part is the marketing margin, one is the refining margin, third is their capex cycle, which is currently underway, which always tends to have cost overruns, which tends to get delayed. And I think with the IMO regulations, not all of these three companies have refining capacities which are so complex, which can take care of the new regulations. So I think it's a very difficult bet, and these companies really on a longer sustainable basis haven't really created much value, and I think they are best for people who can time these companies well, entries and exit. But I think for a sustainable investment bet, these are not the three companies that we would recommend. Being a PSU, we know it has its demerits, and despite being global majors like IOCL does top line of upwards of 4 lakh crore, yet I think it will not get multiples even close to what in terms of an SOTP valuation a Reliance Industry would get for its petchem and refining. So I think it's better to bet on a company like Reliance for if one wants to bet on the refining business and the petchem business as compared to these OMCs.
Okay, well, I want to pick up on something like a Sterlite Technologies, because what we've seen is about 12% up move in the last 5 odd days. It's not doing too much right now. It's currently at 195, 196. The real question is, should we see a little bit of a correction in the next 1 or 2 days, would that be an opportunity to move into the stock? Have technicals really changed substantially, especially considering Sterlite Technologies hasn't had a great year? It has recovered, however, in the last 7 days, as you can see there. Aditya, I'll take this question with you. What would you do with this one, and what would your view be?
So the stock has definitely bounced back from extreme oversold zones. So we have to consider the fact that the stock had fallen from 400 to sub 150 levels. So that was like an extreme oversold zone that the stock had reached. From those levels, it has bounced back definitely, and it has been backed by volume. So there was definitely some news which led to the spike in the volumes. I would watch out for 180 on the downside. If stock manages to hold on to these levels of 180, then definitely there can be further rise in the stock. Short covering rally can lead the stock all the way high to as high as 220. 230, but not at current levels, probably on declines to levels of 190 to 180. That would be my accumulation zone for targets of 220, 230. We'll place a very strict stop loss somewhere around 170. If that is taken out, I'm out of the trade.
Okay. All right. Sameet, if I can take up the steel sector with you, perhaps let's talk about Tata Steel here. Again, very confusing moves, but a lot of traders out there would want to take perhaps bet here and there. It's at 104 right now. If we can also pull up how it's done over the last 7 odd days. And I reckon that in terms of returns, it may not be as much, but on a 1 month basis, of course, it's moved up 7%. Again, you know, there's a little bit of a honestly, I'm not going to go ahead and put in any formation names there. But Sameet, why don't you just tell me how you'd see Tata Steel and how you'd trade this one right now?
See, Agam, as a disclosure, we have been contra bias in the entire metal space, especially Tata Steel, Jindal Steel, and JSW Steel since the early part of February. In fact, we had come out with a thematic report on the entire metal space. Tata Steel was somewhere around 452, and then it gave a decent rally of nearly 15-20%. But again, in last couple of months, stock has come off. But still, we believe that if you have to take another 5 to 6 months, then probably the entire metal space is in a process of forming a strong base, and probably it's in a final phase of its time-wise correction. So price-wise correction is already overdone, and it has been consolidating, and it has been undergoing some kind of time-wise correction. So over the next 5 to 6 months, we would be bullish on the entire metal space. We have been advising our investors to accumulate in a staggered manner. But considering yesterday's price action along with the volume activity, it certainly augurs well for the short-term traders as well. So it has broken out from a falling trend line, the resistance level on a closing basis, and the kind of structure we are seeing, we expect at least for momentum traders another move of nearly 5 to 6% is on cards. So 530, 532, these are the next levels to watch out for, and we would remain bullish. And in case of minor dip towards 500, 498, it would offer a good risk to reward ratio.
Okay, let's wait and watch as the pre-open rates have settled down. Those two, IndusInd Bank and Yes Bank, are amongst the top losers. They're starting off weak and wobbly. Hardly any gainers, but for the oil marketing companies, which arguably, due to the crude price fall, are doing what they are doing. But the broader end of the spectrum is much more dominant with news flow. We'll talk about some of those stocks as well in just moments from now. But since it's just less than 5 minutes to go for the markets to kickstart trade, let's tell you all that you need to know to stay ahead in trade today. The Norwegian Parliament has directed its sovereign wealth fund to sell stake in oil and gas explorers around the world. The world's largest sovereign fund holds stake in 4 Indian companies, which are ONGC, Reliance Industries, GAIL, and one oil marketing company.
And before resigning as auditors, PwC had written to the Reliance Group's financial services companies under a provision pertaining to a fraud.
In key brokerage calls, UBS downgrades IndusInd Bank to a sell from neutral, cutting its target price to 1400 per share. It also further reduced Yes Bank's target price to 90 rupees from 170 rupees.
And the NSE will remove Jet Airways from daily trading from June 28th, citing Jet's failures to respond to queries about rumors in the markets. And stocks trading to be shifted to trade for the segment.
And promoter Reliance Capital plans to sell 2.9% stake in Reliance Nippon. Sale of up to 1.75 crore shares at a floor price of 212 rupees a piece. That's a discount of 3% to the market price yesterday.
And Nikhil Vohra led 6 cents. India Opportunities sells 3% stake in Hindustan Foods at 425 rupees per share.
You know, just a lot of queries on Jet Airways. I must say, if you are trying to go out and buy Jet Airways today, what you are doing is not investing but taking a punt, because no one knows as of now which side of or where will Jet Airways end over the course of the next 3 months. So please be very careful and know what you're doing is a punt and not an investment. It is probably not even an informed trade right now. So just please be very careful if you're trading Jet Airways. What else is looking weak? By the way, Bharat Financial 2, resultant impact of what's happening to IndusInd. Bharat Financial 2 is down about 2.5% in trade, so keep that at the back of your mind. And Avenue Supermarts, after the analyst meet, is down about 2.3% at about 1280 per share. A set of queries that we've gotten, and Parthiv would want your thoughts here very quickly. The specialty chemical companies, Deepak Nitrite in focus for a few wrong reasons of late, but a bunch of others too. After the run-ups that we've seen already, would you go out and buy any of them? Make Money Organic, Simadri Speciality, the second-rung specialty names, would you go out and look at them?
See, Neeraj, very frankly, Aarti Industries is one company that we have liked since a very long time. It has had a stellar run. What I would suggest is just don't go ahead and buy these names. They are now at this juncture overcrowded bets. Everyone wants to be in the specialty chemical space. Let the results flow in, because I think these companies are quoting at lot higher valuation than their 5-year average valuation bands. And now I think the only way they can justify this run is by giving consistency in terms of the results. So I think a stock like Aarti Industries, though it looks extremely good for a longer horizon, but at current valuations, very, very rich valuations, I would want the results to percolate in the next 2 to 3 quarters. So our sense is that I think there's no need to rush and buy this theme. This theme at current juncture is expensive. Wait out on 2 quarters of results. If the results justify, probably it might time correct. And if at all they don't, they might correct in terms of the price. And I think that's where probably long-term investors can chip in into companies like Aarti Industries.
Okay, well, we have about a minute left. And on that note, I'm going to go across to our technical analyst to take their top bets for today. So, Sameet, I come to you first. Your top bet for today.
I'll go with Motherson Sumi. My target remains at 131, stop loss at 117.
Okay, and Aditya, how about you?
A short on Infratel, stock looks extremely weak on charts. Targets 255, stop loss at 280.
Sameet, just a quick thought on Bank Nifty. How would you trade it? 88 points lower?
So clearly Bank Nifty is not going anywhere, and that's the reason we are seeing this consolidation in Nifty as well. So the 30,800 to 30,600 seems to be very strong support. So as long as we are defending those important support levels, one should trade with a positive bias. But overall, there is no trade setup in Bank Nifty at current juncture.
Okay, stay on, Javan. We'll take in opening thoughts from you post-market open. Looks like we're set for a sedate start. The question only is, can we gain at some point of time over the course of the next few days, or would the downtick look like it will continue? But today's morning will be peppered with losses maybe to IndusInd Bank and Yes Bank, and maybe some gains to some of the oil marketing companies. But here's how the markets are starting off this Thursday morning. About 0.25% in the red. The Bank Nifty too around those levels, about 100 odd points. So no great shakes, just about in line with what the pre-open rates were suggesting, what the SGX was suggesting as well. The mid caps and the small caps should come up on your screen. I reckon in line with what the large caps are doing. Yes, pretty much. The mid cap index about 0.25% lower or 1/3% lower. The heat map, and let's see IndusInd Bank and Yes Bank centered somewhere around here. Should come up on your screen. The heat map, Yes Bank down about 5%, IndusInd Bank about 4%. No respite for both of these names. IT's taken a bit of a backseat. TCS was just a stone's throw away from life highs. Infosys is at least 1.5% lower. I don't quite see TCS in the top 10 losers. Let's wait and watch what happens there. It's not in the gainers list either. But essentially, Infosys, IndusInd Bank, Yes Bank, Z Entertainment are amongst the stocks that have corrected. IT is looking weak, mind you. What's doing well? BPCL, HDFC Bank giving some support, but hardly any gainers today. So very muted gains that we're seeing in the markets today. Just want to bring up 3 stocks on the wall today before I hand it over to Agam. One is Dewan Housing Finance, one is Reliance Capital, and the third one is Jet Airways. So 3 names that I just want to point out. Dewan Housing, after having a good run for the last few days, takes a bit of a breather, so down at about 90 rupees. And let's get in Jet Airways and see what that one is doing. Well, 10.3%, 99 rupees now. The futures were anyways in double digits. Now the spot price is also in double digits. It's quite worrying for somebody who's holding on Jet Airways, to be honest. Don't know why the person was holding in the first place, but down. And lastly, Reliance Capital has been at the wrong end of the stick for the last few days. 85, another 3% lower in trade. Agam, what are you spotting?
Oh, well, at least as far as gainers are concerned, we do have the likes of Interglobe Aviation advancing in trade right now. That's up 1.5%, followed by VST Industries. And of course, we've been talking about Motherson Sumi, so that's also on up and about. But the momentum perhaps again today is towards the losers. Syntex Plastics, it will be in focus right now, considering well, news of a default, and while it is already under pressure, it's down 9.5% for now. Besides that, we have Dewan Housing Finance now wilting, starting to wilt. That's down 3.7%. A whole host of ADAG companies down and out. So we have Reliance Power, Reliance Infra, Reliance Communication, all losing out in today's day of trade. And well, a follow-up on JNK Bank, down another 4.5%. So a lot of concerns coming in as far as JNK Bank is concerned too. We'll be watching out for that one. For now, it seems even the advanced decline ratio is towards the negative. And I want to very quickly address the flashes on your screen, because that's got to do with Adani Group. It says that it's got the key approvals as far as, well, okay, they pulled up the flashes, but they've got some key approvals when it comes to Australia, and that perhaps could be a positive. Adani Enterprises for now is up 1%. And we'll be watching out for that as well. Of course, we do get a lot of developments when it comes to Australia, and you know, a lot more than often we see more correction as compared to gains. For now, at least as far as Adani Enterprise is concerned, hanging on to 155, not too much to speak for. Otherwise, well, relatively quiet for now, Neeraj.
Okay, quick opening thoughts from our experts, and then of course some fundamental calls from Parthiv as well. Aditya, to you first. No big bang moves really on the index per se, but when I look at the list of losers, or the string of losers, Indiabulls Housing Finance, third day on a trot, now below 600. Can you talk on that?
There is a massive selling in the stock. Immediate support on the downside now is 570. If that is taken out, stock can slide all the way down to as low as 530. So there's no respite as far as the selling is concerned. Don't look at even a bit to get into the stock. Rather on pullbacks, if you get an opportunity, exit from the stock, because there's massive selling pressure and backed by healthy volumes, very huge volumes. So this is not going to stop before 550, 530.
Okay, looks very, very wobbly. Parthiv, actually, before I go to Sameet, Parthiv, just wondering, Indiabulls Housing Finance.
See, I think, Neeraj, the sentiment is totally dented. And now here we are seeing somebody, I think, filing a PIL talking about a 96,000 crore sort of a siphoning fraud, wherein the book is also not of that big size. I think I would certainly want to wait out on a comment from RBI's auditors. I think it's best that, you know, a regulator like RBI were to make any sort of comment. And I think today, again, the stock is down because that PIL has been accepted by one of the courts and they're going to check out. So I think it's entirely a game of sentiment, despite the fact that the management talked about that they have 26,000 crore in liquidity. Probably I think these groups are right now not being tested, are not being trusted by the market, and that's why we are seeing this massive selling. So probably I think it's better to hear a comment out of RBI rather than somebody from outside just giving a allegation, as a result of it the stock is losing almost 10,000 crore of its market value. So best to avoid these trades despite the fact that they've corrected by 150 odd rupees.
Leave it at that. We'll leave it at that, Parthiv. Thanks so much for taking the time out and being with us today. I appreciate your time. Sameet, Chavan, BPCL is looking as the best gainer on the index. Quick thoughts here.
Yes, in last 4-5 days it has corrected also, substantially from the levels of 420. But we would expect more of a consolidation with a positive bias. The overall structure remains bullish, so we would expect this range bound move, wherein the low side range would be 380, 375, and on the higher side you would see some kind of selling pressure coming in whenever the stock comes back to say 398 or 400 odd levels.
Okay, Sameet, we'll leave it at that. Thank you so much for joining us and taking us through your views on the markets and taking us through several stock ideas as well. But time to get in another fundamental voice. We have Deepak Jasani of HDFC Securities joining us on the show right now. Deepak, good morning and thanks so much for joining in. Let's start off with the two private sector banks that are in focus this morning, both under pressure, significant pressure if I can call that, Yes Bank and IndusInd Bank. What is your view here and how would you advise your clients on these banks?
Good morning. Now, Yes Bank, we have heard about the bank being under trouble and there being possibilities of infusion by foreign equity players. So now we'll have to wait out as to whether that happens, at what price that happens and when that happens. Till that time, the stock will continue to underperform because in the current day and age, I think people are a bit skeptical of taking risks where the intended outcome may not play out in the time frame that they expect. So that is as far as Yes Bank is concerned. I think IndusInd Bank, one of the brokerages, has downgraded the stock because of the slippages and because of the possibility of higher NPAs. I think private banks as a group has done quite well so far. Maybe the whole sector or the group will have to play catch up with the other parts of the market and may underperform for a bit. But I think whenever the market turns upward, I think they will be the first ones to gain attraction.
Okay. Deepak Jasani, good morning, of course, and thanks for joining in. We're seeing some bit of traction in the quality names today. So the Bajaj Finance, the HDFC banks of the world are moving up at the expense of some of the other ones. Would you reckon that this dichotomy could stay stark because of all the news flow surrounding auditors, etc., that the stronger hands, despite the higher valuations, will keep on gaining more traction?
That is what has happened so far, I think. The monies have flowed from the weaker stocks to the stronger stocks with better governance and better visibility of earnings. But now at some point, I think this will have to sort of reverse. Now, whether that point has already arrived or will arrive sometime in future, that I'm not so sure. But I think there is a limit as to how much you can give valuation relatively to the index, relatively to the other stocks in the banking universe. So at some point, people may realize that they may be overpaying for certainty, for visibility, and at that time probably there may be some reversion to the mean. But having said that, I again reiterate that this is one of the best spaces which will bounce up whenever the markets bottom out.
You know, it's interesting, Agam, that the Harvard Marks memo today, which has come out overnight, says exactly the same thing that Deepak Jasani was talking about, that you know, at some point of time, you've got to ask yourself about how much premium you're willing to pay for better governance, better quality by and large. And at some point of time, I mean, if you look at 2000 to 2002 value versus growth, at some point of time, value took precedence over growth as well and gave some staggeringly important returns or better returns. So that's the interesting one. Okay. Deepak, the other thing that we're seeing today is some gains for the other airline stocks, Interglobe Aviation and likely SpiceJet too, at the expense of Jet Airways. Purely from a stock investing perspective, would you believe there is value in going out and buying a SpiceJet and an Interglobe Aviation?
I think both these stocks have a window of opportunity till the Jet issue settles down, or basically either Jet goes into liquidation or somebody comes and rescues Jet. So till that time, they have a window where they will make the most because of the shortage of seats, because of better load factor, because of better realizations. But on a longer term basis, I think airline business is not a great business, especially in India, because of the high costs involved and the fascination for low fares. So in case the fares continue to rise and stay at elevated level, then people will start shifting to railways and other modes of transport. So, and having said that, airlines is a very capex intensive business. And the return ratios are typically quite low. So from a short-term perspective, yes. But from a medium or long-term perspective, I think one can avoid the whole sector.
All right. Well, there's one stock which is under pressure today, and I want to talk about InfoEdge because that's down 1.3%. But what is also interesting is that it's making losses for the fourth straight day. This is after hitting a life high of well over 2,400. So it's corrected calls as well quite substantially. Of course, there was all sorts of news about expansion in Zomato, but we must remember that InfoEdge is only a part-time investor. It's not a fully owned subsidiary or even a majority subsidiary as far as InfoEdge is concerned. That said, as far as fundamentals are concerned, or pardon me, technicals are concerned, it's come off to a certain extent. Aditya, how would you address InfoEdge now? What levels would you watch out for?
So if you, the stock has definitely corrected from levels of 2,400, but it has also seen a significant up move from levels of 1,800, sub 1,800s. So from 1,800, stock witnessed a massive rally till all the way till 2,400, and that rally was backed by extremely healthy volumes. Now the correction that we're witnessing from 2,400 till this 2,100, 2,200 is on extremely shallow volumes. So that tells me that the volume activity that we've seen during the buying side is not seeing on the downside. So this is just a minor correction within the larger scale of rally that we're witnessing. I would not shy away from getting into the stock somewhere around 2,150 to about 2,100 zone. A good buy zone, 2,100 to 2,150 to about 2,100. We'll put a stop somewhere below 2,000 and look for a target of in excess of 2,400 this time around. I expect the stock to hit levels of 2,700 as well.
Okay, that's fairly steep. But also, you know, the other stock which has also come up from its recent highs is Vinati Organics. Again, there was a lot of gush. Do you see that the same could be said about this one as well?
Absolutely right. So these are stocks which continue to make higher highs and higher lows over a longer period of time horizon. So that tells me that the trend is still very much intact. The bull trend is there. You need actually these corrections, these 2-3%, 5% corrections to get into the stock, because you don't get into these stocks. So you wait for a correction. These are idle corrections that you're getting in the stocks. Right. From 2,200, Vinati Organics has come down to 2,040. These are good levels. Holding on to support levels, 2,000 should hold on. I believe these are good levels. You can get into the stock, put a stop somewhere around 1,900, look and target in excess of 2,200 now. It will make a higher high somewhere around 23, 2,400.
Okay.
Deepak, you guys have coverage on this space as well. The reason we talk so much about this pocket is because it's creating wealth for investors. What's your favorite specialty chemical name currently and why?
I think the one which you have discussed remains one of our favorites, but I think at these levels we are not so optimistic on this stock. The stock has already, I think, achieved our targets, and it is so one will have to wait for some correction before we re-enter the stocks.
Okay, so Vinati Organics it is, but not at the current prices, maybe at some other prices for Vinati Organics individually. Okay, at the broader end of the spectrum, stocks that are moving around, on the gaining side, it's only oil marketing companies and to an extent some aviation names. Adani Enterprises, of course, is in focus because I think they've gotten some clearances to start building the Australian coal mine. I think, yes, Queensland DS has approved the groundwater ecosystem management for the Carmichael coal mine, as a result of which this stock is up about a couple of percentage points. I think it's difficult to take an investment call here, Deepak Jasani, Adani Enterprises.
Yeah, the number of businesses it is involved in, the number of geographies it is involved, and there are some issues about governance, not very major, but all said and done, I think very few brokerages would cover and very few funds would have invested in this stock.
And I guess I'm not surprised that that's the outlook that comes in. The other one which is interesting is Godrej Properties, which is now at 906, back above the 900 price. Typically finds resistance here, but tends to bounce back very, very steeply whenever there is an oversold level out there. Before I get to it technically, Deepak, Jasani, lots of problems surrounding NBFCs and conversations around how financing of NBFCs to real estate has taken a hit. It would naturally be the case. The question is, in such a doomsday scenario, would a company like Godrej Properties or Oberoi Realty or some of the others stand out as an investment? Would a DLF be a good investment candidate? Do you guys have coverage within this space?
Yeah, I think we are quite positive on the real estate sector, especially the organized players. Of course, the entry levels need to be tuned in properly. Broadly, we feel due to the changes that we have seen over the last 2 years, business will move from the unorganized to the organized players, and the organized players have now become a little more cautious in making land acquisitions and have tried to bring down their inventory levels, especially of the land and also of the built-up properties. Having said that, I think affordable housing is the big opportunity, but these players are not so much into affordable housing, the stocks named by you. At the same time, over the next 2 or 3 years, I think inventories will come down majorly. The companies will focus more on return on capital, return on invested capital, and that is how I think they will create value for shareholders. But as I said, you will have to fine-tune your entry levels in a better way and don't jump in at the current levels.
Right, Deepak, it may be perplexing to go about and figure out what to do with something like a Motherson Sumi, considering it is not necessarily an all-India play. Well, it's been fairly volatile, but it has also come off quite substantially. And even though there's been a little bit of reversal, a little bit of recovery of late, well, on the whole, a lot of traders or a lot of investors who had got onto that stock at around 160, 170, 180 are, well, in a bit of a dilemma what to do. What would you suggest to them?
See, we don't have formal coverage on the stock, so in that sense, I may not be able to offer much insight into it. But having said that, I think the companies that have forayed abroad in the past, making large acquisitions one after the other, will have to come back to reality in terms of their valuations, because the street was very bullish when these happened, and the projections were very aggressive. But I think the kind of company, the aggressive acquisitions that they have made abroad maybe is bringing down the earnings and the valuation at this point of time.
All right. Well, on a technical basis, I also want to address Delta Corp right now, because that stock, of course, is under pressure. There was some positive news after, well, one of the ministers in Goa had suggested that well, Delta Corp, or pardon me, not just Delta Corp, casinos in general are here to stay. There was a lot of speculation with respect to the banning of casinos, well, a month before the general elections. After that, we've seen a recovery in Delta Corp. It moved around the level of around 190, 200 even, and today it's looking at a little bit of a correction. It's down 2.5%. What's your reading here, Aditya, in terms of technicals?
It has bounced back, but again, the bounce back was on shallow volumes, so I wouldn't read too much into that short covering rally that the stock had witnessed. 185 on the downside is an immediate support. If that breaks, I'll probably look to exit from any long positions if I have. In that case, stock can slide again back to 160 levels, which it did witness in some time back.
Okay.
Okay. Aditya, we'll take a moment to thank you for joining in today. Really appreciate your time.
Pleasure, man.
Thanks so much for being with us. Deepak, Jasani, usually you come out with that idea on Monday, but because it's been a lackluster week, maybe the idea holds good right now as well. Any thoughts on what's the stock of the day, or what is the top buy recommendation from your house?
Yeah, the pick of the week which we issued on Monday this time was Dabur India. It's a quite well-known stock, so I don't have to give much rationale for that stock. Basically, we thought that it has corrected sufficiently and has scope to rise. Of course, it will not give you superlative returns in such a time and age where the markets are still a little shaky. I think this is one of the safer stocks in the consumer space.
Okay. Well, that's Power India for you. And on that note, Deepak, we'd like to thank you for taking the time out and speaking to us here on Bloomberg Quint. But we'll slip into a short break, but right after that, we will find out what Jim O'Neill, the former chairman of Goldman Sachs, thinks about the way ahead for US-China ties with the ongoing trade war and a possibility of a Brexit. And we will also be joined by Sudhin Choksey, Managing Director of Gruh Finance. We will speak to him about the liquidity crisis in the NBFC space and where are they headed. Stay tuned to Indian Open. Lots more lined up. We'll be back in just a bit.
Every once a while, there comes along a visionary who dedicates himself to transforming an entire industry. This is Ashutosh Phatak, a man who created over 4,000 ad jingles in a span of 10 years. He then co-founded Blue Frog, one of India's most iconic live music venues. The Frog created such a deep impact on the music scene that its absence is felt even today. It was more than a venue, it was a movement. And he was there for its final swan song. Restless and determined to drive change, Ashu co-founded the true school of music that has made music a legitimate career choice and created a certified standard, India's first. This is a man who started an unseen revolution and is shaping the future of music in India. Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Jim O'Neill has worn many hats. The former chairman of Goldman Sachs Asset Management says Trump wants to show that he has had the last word in the US-China trade war. Speaking to Francine Lacroix of Bloomberg News, the former commercial secretary of the UK Treasury also rules out a hard Brexit. Listen into a small slice of that conversation.
I mean, my guess is, for what it's worth, is that Trump's going to want to have something to say. The guy clearly likes, you just see with the whole kind of nonsense about Mexico, he likes to present something as a deal that he's won. So my best guess, which I have very little confidence in, is that some sort of headline deal will be announced as tentative and blah, blah, blah. But I think the dilemma that inadvertently Trump has created is a much deeper, unjustifiable, however, in my view, but a much deeper angst about China in the whole of the US. And now, maybe this is behind why he said what he said overnight. If he comes up with too easy a deal, he's now going to be accused of being soft about China. And I'm really bothered about that, because that means we could be set for years and years of reoccurring strategic dilemmas across the piece about China in the US. And I think it's kind of nuts. I don't think the US is being in the slightest bit logical.
But Jim, what is this about, right? Is this a fight of supremacy in the next 10 years, or is this actually about trades? When the president says,
I think it's the first thing. I think originally there was some, bits of it reminded me of the whole game with Japan 30 years ago and the events surrounding the so-called Plaza Accord with the dollar and all the rest of it. And this sort of reoccurring every other decade thing to pick on some country, to basically blame all the US.
They're picking on a big country.
Well, in this case, they're picking on a really big country. But more importantly, it's now morphed into this thing where the US appears to have, I guess, emotionally understandable, but any other reason completely lacking in logic, fear about China becoming bigger than the US. So it's almost like they're now going to do whatever they can to stop China becoming bigger than the US. But I'm not quite sure what the purpose of such a goal is, but it looks to me as though that's what it's becoming.
Okay, and what's the impact on the economy? Is this the psychology of chief executives or even consumers not investing or not spending because they worry?
So I'd probably have a slightly unconventional view about this. I think it's much more concerning than that. If you look at it from 40,000 feet, the past decade, the US has kind of made some structural recovery post-crisis, particularly as evidenced with the current account deficit, dropping to 2.5% of GDP when it was above 6. And the US was consuming too much 10 years ago, and it was all borrowed from the rest of the world. Today, it's back to consuming over 70% of GDP again. So going forward the next decade and beyond, the US economy's future isn't about the US consumer. It's about investing more in real stuff and exporting more to the rest of the world. And if you're going to try and destroy the second biggest place in the world that's growing between 6 and 7%, it is extremely unhelpful to your own long-term interests. So it's not very logical, and I find a lot of people just sort of take it for granted. Because the US cycle is strong, that means structurally the US is strong, but I don't think it's in the slightest bit true. And it looks to me the bond market's realised it.
Are you looking at a recession in the US? And when you look at the bond market, so the inverted yield curve, which I keep on being told this time it's different because of central bank policy action. Yeah. You think actually it's indicating an impending slowdown or recession?
So as you will perhaps recall, going back to my Goldman days, I'm a big fan of something that you would call a financial conditions indicator as a leading indicator. In fact, with Bill Dudley when he was at Goldman, we kind of created them. And they're really powerful for the US, but I wouldn't dismiss the power of the yield curve. I think it's important information. And what I fear is the US has the cycle has become really asymmetric relative to financial conditions. So a relatively modest tightening of financial conditions, which can happen through higher bond yields or lower stock prices or a combination of them both. When that happens, the US economy seems to slow quite quickly, and yet when financial conditions ease, the supportive response of the economy isn't that big. And that suggests to me an economy that's sort of slightly addicted again to extremely favourable financial conditions, which makes them very vulnerable to adverse shocks. And so I think the common view at the moment that the US is relatively immune and can beat the hell up on China and Mexico or whoever, I think it's basically mistaken.
But would the president or the Trump administration or whoever comes next, as soon as they see that, actually pull back, and will it be too late? Like, is a recession in the U.S. in the next 18 months now given, or can they back China?
I don't think it's quite given, but we're getting closer to it in my view. But, you know, again, if you put it in sort of 40,000 feet context and my own experience of looking at the US and markets, you know, the US does tend to lurch quite dramatically. And this approach at the moment is all against the background of this strong self-belief that the US is strong and the dollars, you know, can never be challenged, etc., etc. But once that starts to become challenged by evidence, and if the economy does go into recession or gets closer to it, I wouldn't be surprised if you saw a radical move. Quite how Trump would do that, I have no idea. But obviously, for himself, the economy's stupid. You would imagine as you get close to the election, it's not going to be very helpful to him either. So hence bringing it all back, why I think he'd want to do a deal. But he's unleashed a whole set of forces of paranoia about China that I'm pretty sure he certainly didn't strategically intend. And I'm not quite sure how you put that back to bed.
A promise to take Britain out of the EU on October 31st, whatever happens. But the opposition Labour Party is also launching another attempt at blocking a no-deal Brexit, starting with a vote this afternoon to seize control of the parliamentary agenda. Well, Home Secretary Sajid Javid, also launching his campaign today, will argue that Johnson is the wrong choice. Jim, I'm not sure how we should take it. If you're an investor and you look at this, you got to think, okay, there are 10 candidates. It's more likely that it's probably a pro-Brexit. Does it mean that there's a bigger chance of a no deal, you know, this year than it was 2 months ago?
I'm not sure. I mean, as you've just touched on, probably more importantly than the launch of Boris's formal campaign today is this discussion going on in the Commons about legislation to stop no Brexit, which importantly is going to be backed by a couple of Tory prominent MPs, Oliver Letwin notably. So I'm not sure whether it's Boris or anybody else, how they deal with that. And I find my mind, partly because of Boris's personality, if you make the probably or possibly questionable assumption he's the guy.
Yeah. Questionable, or you think that's like an 80% done deal?
I don't think. There is this fact that for the past 50 years, the favourites never won a Tory leadership campaign. So
but his name's recognisable.
I mean, it's his to lose. It is his to lose. But you know, Boris is Boris, and something may appear or happen where it suddenly becomes impossible for him to be the guy. But if we make the assumption he is, or for that matter, if it's anybody else, I'm not sure how you deal with that. It's easy to play to the very small, unrepresentative sample of very old Tory voters who will determine their leadership. But that isn't representative of Parliament or probably the country. And the new Prime Minister's going to have to deal with that. Now, if it's Boris, because I subscribe to this view, he doesn't really have deep philosophy about Brexit, I find myself wondering whether it actually might slightly increase the probability of a second referendum. Because if he can't get it through, he's going to obviously campaign on this, I'm tough Boris, I led the whole Brexit thing, we're out. But if he then faces reality that he can't do, and the choice is, well, vote of confidence or second referendum. And the last thing a Boris, who's craved being leader of the country for so long, is going to do, I think, is risk an election, because he might end up only being Prime Minister for 3 months. So by default, it's like, well, okay, why don't we have another referendum, no deal, or we don't win?
What's the question on the referendum? Because if you have a referendum, it's unclear exactly. I mean, if you look at the latest polls, actually, it still give it to Brexit, but then we're back to square one if we have the same composition of Parliament. So, what kind of Brexit?
I mean, I've never been a big fan of a second referendum until we've kind of got to this stage. But if you're still stuck in this core impasse between our MPs and Parliament, which at the end of the day, it was all supposed to be our sovereignty coming back, and they won't support a hard Brexit, then I think there is some genuine case to go back to the population and say, actually, is what you really would be happy to see is just a clean, straight break?
But what do you ask? So, are you for a no-deal Brexit?
Are you for a Brexit, which just means get out and ignore the consequences till afterwards? Or would you, in hindsight, rather stay? And maybe you could throw in, as a third part of it, maybe actually Theresa May's deal.
And what do you think, which way do you think it will go?
I think if you had the three options, we wouldn't leave. And I find myself thinking there is probably a stronger probability in, at least for the next 2 or 3 years, that we won't leave than a hard Brexit. Okay. I mean, it's easy to make all this bravado stuff about hard Brexit, but I just don't see how it's going to happen.
Well, that's Jim O'Neill with his thoughts. Now, the next conversation is an important one because a lot of times when there is lack of clarity about what's happening in a particular space, it's always important to get clarity from somebody who's usually very candid. So non-bank lenders have been having a hard time with the liquidity crunch and select few getting rating downgrades as well. But what's the way ahead? That's the question. And as I said, it's important to get a very candid voice out here. Mr. Sudhin Choksey, MD of Gruh Finance. The fact that people appreciate what Gruh Finance says and does is embodied by the fact that it's only one of the two companies or one of the two stocks that has gained each year for the last 10 years. And that speaks volumes about the market's confidence in the commentary and in the work. Mr. Choksey, thanks so much for joining in. Appreciate you taking the time out. Just wondering, sir, the conversations around brokerage conferences, and there are a lot of them right now going around, or even when people come to us and ask us queries, are about whether the NBFC space by and large is imploding, or is it's going through a transition and will be back very, very shortly. What's your industry view, sir? Not just a view on Gruh Finance, but on the industry.
I think I personally feel, the dust will slowly or gradually settle down. I think if the players stick to the prudence of, observing the, ALM guidelines of the regulator and building some amount of liquidity with them, I think that will see them through this difficult period. As you are aware, this situation has been more accentuated because of the many factors in September, October. I think, the reaction at the market probably, gripped much more than required fear. And I think that it all rolled into a difficult situation one after the other. I think it's a compounded situation because of the many factors. But I think if you look at it, market is coming back to normal. I think players have been raising money in a short-term money market. And I think in course of time, you will see probably the prudence will prevail and things will come back to normal.
Mr. Choksey, the fear among some of the people is around the lab book that some of the financiers have as well. And 2 points out there. One, whether the lending on a particular project has been done more than what was prudent. And two, in certain cases wherein the valuation of that said project which was kept as collateral having come off quite materially from the time at which a deal like this would have been done with the financier. What happens in such a scenario, sir, wherein the whole property was worth, say, maybe at 1,000 crores, now the current valuation scales down to 750 crores, the value of the collateral may have been 800, 900 crores, and the sales are anyways not happening. How does the financier recover the money?
No, I think it is a difficult situation. So I think that is where the question of having not exercised the prudent and having taken a significantly high exposure on a product like, LEP, where the end use of the money is not under your control. And as you know, in our country, the way the valuation, which is being carried out by the various valuers, and I think that all has increased the risk. And I think this was known for a long period of time. It's a risky path. The methodology of valuations are significantly on a higher elevated side. And I think some prudence should have been exercised at that point of time and not brought them into this situation.
You reckon that while the dust will settle, it could be a slightly prolonged period, Mr. Choksey?
I think it will be a little longer. I think if you go back to post-2008 where we had, Lehman crisis, the things got back to normal probably in a 6 months or 9 months time. But the thing at that point of time, the RBI and the Ministry of Finance had opened up a separate window of liquidity and things like that. But I think that was being addressed for the liquidity. This time the problem is on the risk which the players have taken. And as you have described the factors which has been causing the repayment of the loans and the defaults, So I think that scenario is slightly different, and you'll have to pay the price. I think the people will have to pay a price for the kind of the risk, high risk they have taken to garner a higher yield.
A lot of purists would say maybe that is the right way to approach this as well. So I can't debate that. Did you find, I mean, did you get all that you would have been hoping for in the policy statement? I mean, amongst other things for the NBFC space, while a few people would have been disappointed, the RBI did go out and say that they are appointing this committee which will come back with the recommendations by mid-July, and then the Reserve Bank may act upon it as well. Is that a prudent move, you think, sir?
I think at least I was glad to hear that, that they are going to look at the framework of liquidity, and I think it will be good. And let's wait for what is the kind of the recommendation the committee is coming out with, and what recommendations will be put in a place.
Okay. Mr. Choksey, I don't want to get into specific numbers, but how are things looking for Gruh Finance as well? You would be amongst the stable ones. Is the market very, very slow, or is it limping back in that sense?
The market has been, there is no major change. Things are moving at a slower pace. But under the present circumstances, I would feel satisfied with what we have been doing. And the normalcy has not come. I think it will take a little longer time. But nothing to worry at the moment. Things are gradually moving.
If I can just push you, sir, because people are confused with the timelines, your best case estimate when you say that things might take a little longer, would it be longer than a couple of quarters, maybe 3-4 quarters at least, if not more?
Yeah, I think so. It will take 3 to 4 quarters at least. In my opinion, I think the normalcy in the real estate sector would come back probably by the next October.
By next October. Okay, great. Mr. Choksey, thank you so much. It's always good having a candid voice. You are as candid as they can get. Thank you so much for joining in today. That's Mr. Sudhin Choksey, MD of Gruh Finance. It's important at times to just get a perspective on what's happening around the space as well. Normalcy in the real estate space, maybe by next October. Well, he calls a spade, doesn't he? The market's down about 0.5%. Just want to mark what TCS is doing. Just bring that stock up. IT is not having a particularly great day, but Tata Consultancy Services should come up on your screen. I think 14 rupees higher. This would mean that TCS is now trading at record highs, if I'm not wrong, and above market capitalization levels of 8.5 lakh crores. If I can just get this year's chart of TCS up on the screen for a moment, and I would reckon that it would show you that TCS is in or around those levels. Yeah, it is trading at record highs. TCS is up 20% at a point of time when the rest of the IT pack isn't quite doing much. Tata Consultancy Services, the big boy, extends its lead over the other rivals, or Reliance Industries in terms of the market cap race, and in general crosses the 8.5 lakh crores market cap mark too. So good going really for Tata Consultancy Services in the session today. Not the best of days for the other IT names. Infosys and HCL Tech in the red. JSW Steel, Tata Steel from amongst the metal stocks in the red. Larsen & Toubro seems to be doing okay for itself though. Bajaj Finance is the other one which is nudging or trading above the 3,500 mark. It's a wrap on this leg of Indian Open. Thanks so much for watching. Up next is the F&O Show.